Welcome to the Money Insights Podcast, where high income earners come to learn wealth building strategies that will take them from high income to high net worth. With your hosts, financial and wealth building experts, Christian Allen and Rod Zabriskie.
Welcome into today's episode of the Money Insights Podcast, where we talk all things money and business. This is Rod Zabriskie, and I'm flying solo today. Christian will be joining me back here again next week. But for today's episode, I'm really excited because I had an interview with Nik Bathia, who is the founder of the Bitcoin Layer, the author of Layered Money. Really a fascinating conversation because, well, maybe I can break down a little bit of Layered Money. So I read the book and was really excited to have Nik agree to come and join us for the podcast. And in his book, he lays it out in a way where you can understand Bitcoin, how it works, how it fits in with kind of the historical currencies. And what he's going to say is that it is slated to become mainstream currency of its own. So I'm really excited about this interview. Let me just give you a little more information about Nik. He is a financial researcher who has experience at a trading desk for a major institutional asset manager. And with that experience, kind of learned really in depth about money markets and interest rates and other things like that. He was living it every day. And then he got fascinated with Bitcoin and learned about that, and kind of creates this bridge between what traditionally has been, and what is kind of up and coming with Bitcoin. So really excited about that. He's an adjunct professor at USC, and he'll tell us a little bit about his journey in getting there. But anyway, really excited about the interview and hope everyone enjoys my conversation with Nik Bathia. Okay, welcome to the show, Nik Bathia, founder of the Bitcoin Layer and author of Layered Money. Thanks so much for joining us today, Nik.
Thanks for having me, Rod.
Absolutely. Okay, so first off, what I'd like to do is have you tell us a little bit about what makes you tick. So what personal or life factors led you to finance?
Yeah, as a young person, my father was in medicine, and as a young person, I, would go to the office with him sometimes and see his, medicine side of things. But then I would see him go upstairs and deal with the management company and talk about the finances, and that always interested me more.
Okay.
And he read Barron's and had CNBC on, as a kid, and it always interested me. Markets always interested me, and I had my first few shares of XYZ tech companies during the internet bubble
Okay.
as a young person. So I had an early interest in financial markets, and as I grew older and studied more in school, came across economics and world politics.
Mm-hmm.
These were the courses in high school that attracted me the most, and really locked in my focus on this path to become a financial market participant.
Cool. So almost like it was in your blood, like you're presented with a lot of different things, and it sounds like that's just like what was drawing you.
Yeah, I mean, of course, I wanted to be an NBA player as a young
Okay. All
child,
right.
but
Yeah.
not going past 5'6" was definitely a challenge there.
Yeah.
So,
Gotcha.
but I've and music has been a long time interest of mine, and I even attempted some music projects as a young person as well. So,
Yeah.
a lot of interests, across the spectrum. I even considered going to law school after university, but I'm thankful that I ended up where I am, and
Yeah.
that is a participant in the financial markets.
Awesome. So you get a degree in finance, and then you get to the trader's desk. So tell us a little about your time there.
Yes, so I started my first role as a front office member of the investment industry
Mm-hmm.
was as a cash trader. It's what they call traders that are basically trading treasury bills,
Okay.
treasury repo, other discount securities, commercial paper securities, and money market instruments, money market funds. And that was my world for my first year on the desk. And what a great place to get your training, because learning about bills, repo you have to be a Fed watcher through and
Hmm.
through. You have to understand treasuries, monetary policy, the economy, and what's going on. So you're basically at the center of the rates desk. And I'm really happy that that's where I was. I gravitated toward the T bills side of the cash desk
Hmm.
as opposed to the commercial paper or certificate of deposit side of the cash desk, which, as you know, is credit, not rates.
Yeah.
And corporate credit or bank credit is not my interest. I
Okay.
don't actually care about uh, individual companies and their earnings or their credit profile or relative credit worthiness within corporate space. And so I, basically established my place as the bills trader of the desk and the repo trader as well of the desk. And that eventually opened the door to trade more of the treasury curve out to 5 years, then was my next role, and eventually took over all cash treasury trading. I mean, meaning all the way out to 30-year
Yeah.
no, bonds, in as well as the treasury futures uh, dynamic within the firm. So all that futures hedging on the treasury side of things. So that was my
Very cool.
full responsibility over the course of my career on the desk. And as I became the treasuries trader for the entire curve, I also established my place as a contributor on interest rate strategy. So essentially duration calls or how to position the portfolio for price sensitivity to changes in interest rates along the curve.
Yeah. So all of this prepares you for kind of where you are have led to today. Let's next talk about the book. So, Layered Money, and I've enjoyed reading it. It is a little more technical than often what I read, but it drew me in and it kind of led me along. So I think you do a really good job of moving one piece to the next and slowly building so that someone again as non-technical as myself can follow it and really do well. So but what took you to where you decided to write the book?
Yes, so I in 2019 I had already established myself as a Bitcoin writer,
Okay.
someone who was writing Bitcoin, essentially research posts. And I had, a dozen, half a dozen at that point. And I had a lot of energy around Bitcoin writing. I loved it, and it's something I started in 2018. I was on the desk at the time, so it was kind of like a nights and weekends sort of thing
Yeah.
for me, and a hobby of sorts. But in 2019, I faced a serious career fork in the road. It was continue in the fixed income market as a rates person and then
Hmm.
as a rates expert, and move up to strategy, portfolio management, and pursue that long term, or take this path as a Bitcoin writer and as a teacher because I was presented the opportunity to become an adjunct professor at USC,
Yeah.
my alma mater, and somewhere where I'm a third generation Trojan.
Cool.
I don't tell this story a lot, but my grandfather went to USC, got a double master's in the early 1950s, and moved my family from India through England to the United States because of his love for USC film and Southern California.
Nice.
So the opportunity to teach at USC was the honor of a lifetime for
Mm.
me. And it came with, and the course, by the way, was rates. That's what I
Okay.
teach.
Okay.
That's the course. I have a second Bitcoin course now, but that's brand new as of 2023. And so it was to teach rates, but I had this opportunity to teach at SC and pursue Bitcoin writing, or stay rates and maybe not ever get to explore Bitcoin writing with my full energy because it was, I still had compliance considerations
Sure.
on the desk,
Yeah.
and that restricts you because you are a fiduciary first. And I took that role extremely seriously.
Sure.
A fiduciary puts their client even above their firm and, of course, above themselves.
Hmm.
And that's the road I went. I went toward Bitcoin writing and teaching. That was at the end of 2019. The pandemic set in March 2020. And I just said, I'm going to drop everything that I have going on the side and I'm going to write my Bitcoin book, which is my explainer
Hmm.
for why Bitcoin is a logical and evolutionary innovation in money.
Yeah.
And from the monetary science side of things, it is the merger of cryptography and monetary science.
Yeah,
And
and I think it does a really good job of that. And maybe you were, I don't know, uniquely qualified because of your experience in that world, and then, like I said, starting as kind of this side thing, but really becoming an expert in Bitcoin and whatnot, and so kind of bridging that gap of how and why Bitcoin can serve a role in the monetary world.
I knew that my time on the desk trading billions of treasury securities on a weekly basis and, seeing a hundred, over 100 billion basically across my desk and seeing how large institutions allocate capital from that vantage point, the original working title, this is actually before I came up with the whole layered money story, but my original intent for the book was something like Bitcoin through the lens of a bond trader.
Hmm,
That's the book I wanted to write.
gotcha.
And that was the working title before I had a working title, for the story itself. But before I even resigned from the desk, I wanted to write a book called Bitcoin Through the Lens of a Bond Trader.
Gotcha. Cool. Well, I think one thing that's really interesting to me and that really helped is the way that you broke it. And I mean, you called it layered money. You ended up, that's but that idea of and just the structure, this kind of hierarchy that you were able to create of these layers of money. So maybe maybe to create a baseline, let's talk through a quick summary of what you call the layers. Maybe we can start where you began with gold as the top level and go from there.
Sure. So the book is called Layered Money. And the word layered is, I took it from Bitcoin and its relationship with its second layer payment solution and scaling solution, which is called Lightning Network.
Okay.
But the layered framework is derived from or borrowed from Professor Perry Merling, an economics and banking professor who is quite a mainstream financial academic thinker
Mhm.
and widely cited across all walks of finance, banking, and monetary science
Yeah.
for his books, papers, leadership. He also has one of the best free resources in banking and finance, which is his Coursera Money and Banking course, which could explain to you 10 times what I know about banking.
Gotcha.
But Professor Perry Merling put forth a paper in 2012 called The Inherent Hierarchy of Money, in which he explains that gold, government currency, and commercial banking deposits, these three types of money, historically have a hierarchical relationship with each other,
Hmm.
in that central bank currency or government currency is a liability of the government slash central bank, which is a promise to pay gold,
Hmm.
and commercial banking liabilities or your deposits, your checking account, is a promise to pay government currency. So, in that way, gold is at the top level of the hierarchy, central bank money is at the second level, and commercial banking deposits is at the third level of this hierarchy. And it's a theoretical hierarchy because it's historical in nature. Obviously, gold is not at the top of the hierarchy
Right.
of the dollar today,
Right.
hasn't been so for over 50 years, and in theory, much longer. Call it maybe 90 years or so since the 30s.
But the idea was when we were on the gold standard, the idea was that if I was holding uh, a dollar bill, or even before then, like a couple hundred years ago, some sort of note that tied it back to gold, it was cumbersome to carry gold. It was risky to carry gold for a lot of reasons. I didn't want to just carry gold around, or and so having these bills replace that made sense, right? So but again, there was something backing it, right? So then, now that we're not on the gold standard, what replaced it as the top layer?
US Treasuries. And US Treasuries are held by the central bank as their core asset so as to give confidence to the liabilities that they issue to the public and to the banking system. And so US Treasuries are the first layer of money in the dollar spectrum.
Yeah,
And if you think about, if people think about dollars, oftentimes they think about the bank account balance that they have,
yeah,
not understanding that that's just a banking liability, and that for normal people to protect their money, they should remove their deposit from the bank and put it into a brokerage account and purchase a money market fund that owns treasury bills, for
yeah,
example, like a government money market fund, which there's a whole regulated spectrum. It's called 2A7 is the technical term for government money market funds that, Fidelity, JP Morgan, Bank of New York Mellon, State Street, they all have these massive money market funds that buy treasuries, treasury repo, also keep money at the Fed's reverse repo facility. These are instruments that own the actual forms of dollars
hmm,
that don't have risk. But your commercial banking deposit has essentially full exposure to that bank outside of the FDIC insured amount.
right,
We know that that's now a moving target post Silicon Valley, et cetera. But the point here is that money falls into a hierarchy. And so treasuries are on the first layer, Federal Reserve money, which is reserves in the banking system, and cash are on the second layer, and your commercial banking deposit is on the third layer of money.
so the difference to me, as I looked at that and I said, okay, gold, you can hold it, it has intrinsic value, even if it's not a coin or maybe tradable, or I mean, like, collectible or things like that. A treasury has value because there's this promise. But again, well, maybe I should ask you, where does the value come from? It's not intrinsic in the commodity like gold was. Where does the value come in when we're using the treasuries as that top layer?
Yes, I mean, it really comes back to the decision in the early 1970s to go off of a gold standard. The US believed at that point that it had the creditworthiness and the confidence of the world and of its citizens to remove a link to gold convertibility from the dollar construct. So we are in year 50
Hmm.
of that process, and that is the world that we live in. So it's the answer to your question is confidence.
Yeah.
Where does the confidence come from? It comes from a 50-year track record, because the decision was made in the 70s to make this move away from gold. And did it work out well for the US, broadly speaking? I would argue, yes, it did. And
Yeah.
so that's the environment that we live in. The US Treasury security is a promise to pay dollars by the Treasury Department or the US government. And that is, in today's world, as good as gold, as the
Hmm.
saying goes, because it is the standard for a final settlement, really, in the dollar spectrum. And I'll tell you what is not the final settlement replacement, and that's a bank wire, a bank deposit,
Hmm.
because that exists in a highly fractionalized sort of way,
Right.
and with a large amount of counterparty exposure to the bank.
Yeah, absolutely. So I guess then we're saying, or you're saying, the last 50 years has proven out that it worked, and maybe even worked beyond what they expected because of just the global nature of what the monetary system is right now, and the role that the Fed plays in that. But I guess my next question is that sustainable long term?
Well, has it worked out for the living standards of all Americans and the purchasing power of all Americans? I would argue that that is convincingly in the probably not side of
Okay.
things. And so, is it sustainable? Well, that would require all the participants of that system to benefit from that system.
Hmm.
And, I would argue that that's not the case.
Yeah.
And so there are those that are opposed to a break from reality for the US dollar and the US dollar system. It can get political there, where people take to politics to express why they think this is a wrong system. But it also can go beyond politics as well, just looking at the Federal Reserve and the nature of the banking system as well, and the relationship of money with commodities and property.
Right.
So I think that's what we find ourselves in today. The rise of Bitcoin is part of that. The rise of property speculation, the rise of stock market participation from average wealthy Americans as a way to keep up. All of these things are dynamics and echoes of a break in the dollar's link with gold potentially. And I think that these factors are with us in the culture and the conversation today, and will continue to be there.
Right. And certainly over the last 15 years, it's been strained. And even just, like recent the last 6 weeks, nine months, that's happened. So how would you characterize how these events that we've seen over the last, again, it goes back 15 years, but even you go to 2020 to last year in the summer of, where the result of all the inflation, and now the Fed has to make changes, et cetera, basically forcing some of these banks to fail and then stop gapping that to make sure it doesn't become, epidemic in terms of those bank failures. So how does that all play out and strain the system?
A What is the focus of economists? It's growth, right? The growth of the
Yeah.
economy. And in order for an economy to grow in this leveraged system, the amount of credit issued always has to increase. And when the amount of credit issuance decreases, it causes disinflation, recession, and it it strains the system. And because the system is so leveraged, that when it goes into a deleveraging process, it becomes so punitive that government has to come to the rescue,
Hmm.
because it depends on constant expansion. So the leverage in the system, the amount of debt in the system, the amount of credit that has been issued, money that has been lent into existence,
Hmm.
all of that does depend on a constant expansion. It goes through cycles, but it does depend on expansion. And central banks have become the entity to fuel 100% of that expansion over the last 15 years, as private credit creation through the Eurodollar system, has slowed down as a result of recognizing, this goes back to the middle of the book of Layered Money, why the development of the offshore dollar spectrum
Hmm.
became so threatening to the idea of the dollar, that the Fed had to come in and actually backstop the offshore dollar system as well as the onshore dollar system. And that's the environment we live in. So the Fed is the lender of only resort. The Fed is tasked with providing credit issuance when it seizes in the broader economy, and with the cyclical nature of the business cycle and monetary policy cycle, we're actually going to see that happen again here as credit contracts.
Hmm.
What is going to happen? The Fed is going to have to respond with liquidity, and it's a boom bust cycle. The cycle approach to investing and macroeconomic research is absolutely at the core of what I do at the Bitcoin Layer, my research provider. We have a free newsletter and YouTube channel, podcast. People can find everything at thebitcoinlayer.com. But that's what we're building. We're building a research tool to explain to people that this business cycle kind of dictates all.
Hmm.
And it dictates the way that the Fed reacts in a countercyclical way. It affects asset prices, and it affects asset allocation, meaning you have to know where you are in the cycle to allocate assets in the best possible way. I teach this to my USC students. I try to teach it in my writing at the Bitcoin Layer, and the cycle and how to identify where we are in the cycle is so essential to understanding what's going on. Once you do that, you can understand that the Fed has to and will respond with credit issuance or liquidity measures when credit contracts because of the nature of a credit money system.
Yeah, right. And there are those that say, well, and we'll get more on to the Bitcoin and other things, but there are those who say that the current monetary system will collapse, and when it does, we'll fall back to gold and basically kind of like start over. So what do you say to that?
I mean, they've been saying that for 50 years.
Yeah.
And the answer is yes, they have, because you can actually go back and read all the books, research papers, hysteric newspaper articles, and magazine articles that say the death of the dollar is coming, the bursting of the sovereign debt bubble is coming, hyperinflation is coming. All of those things have accelerated in terms of being headlines
Hmm.
since the financial crisis as well. We're 15 years removed from the financial crisis. The dollar is still the world reserve currency. Foreign holdings of US treasuries were $1 trillion in the year 2000. 23 years later, they're at 7 trillion, and they're off from almost 8 to about 7.5. So that's what's happened over the last year. And people are saying, oh, we're for the death of the dollar. No, it it's not based in any reality.
Hmm.
80% of global oil settles in dollars.
Gotcha.
3% of global FX reserves are in Chinese yuan. 3%. So the the idea that China and Russia and Brazil and India are going to come together and form a gold/oil backed commodity currency regime that challenges the dollar, it is very far fetched, and it has become almost mainstream. But I will cite the same 2010 article that says China and Russia agreed to drop the dollar in bilateral trade. That's
Yeah.
now over 12 years ago. That was in November of 2010. And in 2018, the official beginning of the technology Cold War between the United States and China even further pressures the Chinese yuan from becoming an internationalized currency of any relevance whatsoever. And gold isn't even part of that conversation where people are
Hmm.
actually talking about the Chinese block and the Chinese currency linking to gold. They're not even talking about gold itself. They're saying that China owns gold, and so therefore this will become a thing. How big is the Chinese global the Chinese bond market proportion that's owned by foreign investors? So I gave you the treasury number is 7 trillion. The total bond market the foreign ownership of the US bonds in total is 12 trillion. So about 7 trillion in treasuries and then another 5 trillion in mortgage-backed securities and corporate bonds.
Okay.
12 trillion owned by the world of US bonds. How much for China? The world owns their bonds? 500 billion.
Interesting.
How large is the market cap of Bitcoin? 600 billion and was, a trillion. So Bitcoin is actually in that conversation already. And yes, gold is the market cap is 10 trillion, and it is a large portion of the overall reserve makeup of central banks, governments, family offices, and families around the world, especially if you consider countries like India and China, where they
Hmm.
value physical gold ownership. The Chinese government actually has been encouraging its citizens to buy physical gold for the last 15 years.
Gotcha.
So there are competitors to the dollar on the horizon, but all of that needs to be taken with a grain of salt and with the numbers and
Hmm.
the trends
Hmm.
themselves. The death of the dollar is the most celebrated non-event of the last 50 years, and people really need to understand the numbers. We've broken down the numbers, some of these numbers in the Bitcoin layer. I'm going to continue to write about it and make videos about it to explain here that the death of the dollar is not on the horizon. There are challenges to the dollar, of which Bitcoin is a serious one. But
Right.
even then, the sizes, you have to align the sizes of these nominal quantities of money, of reserves, of wealth around the world. Bond and stock markets are both $50 trillion each in US based securities alone.
Hmm.
It's 100 trillion of, in theory, non-leveraged wealth, and I understand a lot of that is financed on a short-term basis, via the repo market and other borrowing. But there is 100 trillion in wealth there that exists, and Bitcoin is 600 billion. Gold is 10 trillion, and the Chinese bond market owned by the rest of the world is, less than far
Yes.
less than a trillion. And I
Yeah.
understand that Chinese stocks and the aggregate bond market is there, but the numbers just don't line up with the death of the dollar narrative. And you can still talk about the measures, but they're just measures, announcements, hopes and dreams, contracts, handshakes that we're going to end the dollar, but the numbers aren't there yet.
Yeah. Yeah. That's super helpful. Okay. So now we're going to switch gears a little bit because I want to take a step back now with Bitcoin. And we started with the layers with gold at the top. We switched to the treasuries at the top. Now let's talk about that hierarchy with Bitcoin at the top.
Bitcoin is deriving its value today and over the past, call it, dozen years of time series price data. It derives its value from the issuance of the monetary unit within the software and the energy that secures that network. That's called Bitcoin mining.
Mm-hmm.
And the energy that secures the network and the rules of that network, which have gone unchanged in terms of issuance schedule, has given Bitcoin a value in the market. Now that value is about $600 billion. It reached above 1 trillion in late 2021
Mm-hmm.
and dipped to, about 300 billion there just a few months ago when FTX went under.
Mm-hmm.
That's now, about 5-6 months ago. But Bitcoin has attracted, let's call it, $500 billion of market value, and really on a steady average basis here of the last 3 years or so, where it's had a market cap of about this amount. Now, people call Bitcoin a bubble, speculative bubble, but Bitcoin has actually had 80% declines at 3 different cyclical points in its young history.
Yeah.
And each time has risen to a market value. This time we'll have to see if it does it again. This is the fourth decline. So if and when Bitcoin does rise above its 1.34 trillion market cap high, previous high,
Hmm.
and $70,000 US dollar price. It will have completed this process 4 times. But the market and people around the world, Bitcoin adoption is actually, um, I'll give you a statistic. There are over 50 countries in which 10% or more of the populace owns Bitcoin,
Yeah.
participating in some way, shape, or form that I got from Statista data, and that's as of 2022. So Bitcoin is an incredibly global
Hmm.
currency already, owned by a huge uh, section of the world's population. And you can't really say there's one type of Bitcoin owner or Bitcoin holder. You just think about the proliferation of Bitcoin versus physical gold in a day and age like today, with the internet and, you know most of Africa and Asia experiencing smartphone usage before ever uh, sit down internet connection.
Mm.
um, that's that's the setup for Bitcoin to achieve value. And because Bitcoin doesn't have a center, there's no company, no
Hmm.
person, and people really do have to spend some time understanding what Bitcoin mining is and how Bitcoin's blockchain works
Yeah.
to discover how it is truly decentralized. There's no company, no person, no committee, no foundation, no address. There's no center of Bitcoin. It does truly exist in a decentralized way and in decentralized internet environments around the world.
In
The same
in
cannot be said for other cryptocurrency, that, a lot of them, or not even a lot of them, 100% of cryptocurrencies are an echo boom of Bitcoin, and therefore have an identifiable person, company, or foundation that has been integral in the launch of, and issuance, and even regulation of their own networks themselves. That does not exist in Bitcoin. The government, US government, IRS, CFTC, even the legislative branch have all understood and even declared Bitcoin as a commodity. The
Mhm.
legislative branch hasn't officially done this, but they are going off IRS and CFTC rulings. That has not been applied to any other cryptocurrency yet. Where Ethereum is, people, some are arguing it's a commodity, others are arguing it's a security. That's a legal battle that will continue to rage on for years to come.
Mhm.
And to just assume that that's going to play out quickly, I think, is premature as well. So Bitcoin is a digital commodity, and because it has achieved this digital commodity label, which is, by the way, unprecedented in history,
Right.
human history,
Right.
it is positioning itself as digital gold. This is one of the first narratives. Digital gold means that gold was the universally accepted and understood neutral commodity, apolitical commodity. Bitcoin has re engaged those properties in a digital form. And that's why Bitcoin has the potential to serve as a first layer money. And you ask me why I wrote the book. Part of why I wrote the book was to challenge people that thought Bitcoin is useless because we have PayPal.
Mhm.
They exist on actually 4 layers separated of money if you work with the hierarchical framework. And so Bitcoin is a first layer money owned by millions of people. Some can argue between 40 and 200 million people around the world have allocated to Bitcoin. That's a
Yeah.
lot of people that have Bitcoin in the form of a digital commodity without any link to the dollar hierarchy.
Yeah.
And that sets the table for a long road ahead for Bitcoin.
And what's interesting that I thought was interesting from the book is, in the same way that I described in gold, it's impractical for me to carry it around and it's risky for me to do that, whatever. And I can't obviously carry I can carry Bitcoin because it's in my digital wallet, but I can't necessarily transact in it in a practical way, right? If I'm going to buy, I'm going to the store, I'm going to buy something with Bitcoin. If I was truly transacting in Bitcoin, there's this time lapse that has to take place for the transaction to complete before I can walk out with my groceries, and so it wasn't practical at that level. But then with these additional layers, then that creates that transactional quality to it, while still Bitcoin is the underlying value that is being transacted. Is that fair?
Yes, and that's called Lightning Network.
Yes.
And you asked me why I transitioned from the fixed income desk to writing about Bitcoin. Actually, like the implementation and invention of Lightning Network, which happened in 2017, 2018, was the property that I was waiting for to take Bitcoin from where it was, which was a little bit of this slow moving
Hmm.
commodity, to now an instantly settling digital commodity as long as you're already a participant in the network,
Yeah.
which can take 10 to 30 minutes. But once you're onboarded to the Lightning Network, you can now transact Bitcoin with any other Lightning Network participant without any risk of that money not being yours because it's cryptographically the same thing as a Bitcoin transaction.
Yeah.
So it's just as secure as Bitcoin. And yes, the Lightning Network is only 5 years old and Bitcoin is 14 years old. These are young, relatively young technologies. But what I identified in the Lightning Network, which was bringing a slower moving digital commodity into instant settlement and enabling Bitcoin to scale to the world truly. And now I can attest to this as someone who uses Bitcoin hand to hand, that Lightning Network transactions make up 90% of my Bitcoin transactions.
Hmm.
If I'm sending or receiving Bitcoin, if I'm sending Bitcoin, basically 99% of the time I'm using Lightning Network.
Yeah.
And if I'm receiving 90% of the time people send me money using Bitcoin, and I'm talking about hand-to-hand transactions here, it's Lightning Network
Hmm.
that we're all using because now that's the way to it's like people that use Venmo and Zelle and PayPal here.
Yeah.
Those are like the three main. You don't have to fight to figure out how to pay each other digitally now.
Yep.
Like, do you have Venmo? Yes. Zelle? Okay. PayPal? One of the three, somebody's going to have it, and you'll be able to transact digitally with that person. Lightning Network is that, an all-in-one. There's no competitor to Lightning Network. Every Bitcoin company that's building Bitcoin products is integrating Lightning Network to make sure that the ease of sending and receiving Bitcoin is there and doesn't have a slow 10 to 30-minute burden
Yeah.
of the blockchain. That blockchain burden is essential for security and can be accomplished by any participant in the network. And just like, setting up your Venmo account, you're going to have to
Yeah.
download the app, link your phone, authenticate the email, do the 2FA. It's going to take a few minutes.
Hmm.
So is getting on the Lightning Network. And once you're in, and the development in Lightning Network is part of why I chose this path. I'm glad that I'm glad to see the development. It's probably exceeded my expectation coming back to 2018. If your audience is familiar with a couple of these exchanges, BitMEX and Kraken are two exchanges that have implemented Lightning Network
Yeah.
and are big users of the network itself. As money goes in and dollars go in and out of Bitcoin exchanges
Hmm.
as fast as Bitcoin can now with Lightning Network.
Very cool. So I want to circle back on one thing. So you talked a little bit about how Bitcoin is one of the things that's unique, or like the central identifying factor that is unique to it is that it is decentralized, not to an individual, not to a company, not to a committee, not to a country, whatever. And this is probably impossible to answer, but I'm going to ask it anyway. what is it possible that we could have another Bitcoin, another decentralized platform that could come about? There are those who want it, who would love nothing more than to create it, but how, like, the founding and kind of the creation of Bitcoin is this mysterious figure out there that nobody can go back and point to. Um, so I guess anyway, I'll leave it at that. That's my question. Is it possible?
The origin story of Bitcoin is, I mean, it's a magnificent mystery, and people might not be satisfied by this description of Bitcoin's creation, but I'm going to say it anyway, and I've said it before. It was an immaculate conception in that nobody was looking for it. And then when it had grown to be large enough and actually Satoshi left the project, had already
Mhm,
left the project and kind of set Bitcoin on its path to exist without him
mhm.
or her or they,
Yeah, right.
that dynamic, I do not believe can repeat itself because Bitcoin, this is also what people have to understand about Bitcoin and its history. Bitcoin is actually a computer science evolution. So, in a way that if any of you have participated in research studies, or academia, what do you have to do when you're writing a paper? You have to cite all the relevant theories or data findings in your field to establish legitimacy for your own thesis. If you just start a thesis and don't cite anything that came
Mhm.
before, your paper is essentially irrelevant because you're ignoring the track of your study, of your
Yeah,
field of work. You don't have to agree with the past. You have to cite it though and say, this is what has been, and this is what I think. And it's either a slight adjustment or an overhaul of what has come before it. And that's how research and science actually works.
yeah.
It builds on the past. And so when Bitcoin was invented with a paper that was released in October 2008 and a working live code in January of 2009, it was a mere evolution of papers and softwares that had been launched in 2005, 2001, 1998, all the way back to the original Merkle tree of cryptography, which goes back decades, and
Mhm.
probability theory even, for random number generation,
Yeah.
public and private key cryptography, older technologies, right? Bitcoin uses SHA-256, which is a type of SHA-2 secure hash algorithm, which was invented by the NSA, US government intelligence organization, in 2001. It was announced in 2001. How long they've had it, is not my field of
Mhm.
expertise. My point here is that Bitcoin was the next software and paper. It was a paper. It started as a research paper, as an idea. And guess what it did? It cited 10 different papers written before it and said, here are the components that I used, and this is what I put together. And voila, I've created a decentralized peer to peer electronic cash system. That's the title of Bitcoin's paper. And so, how does that process happen again, Rod? I would ask you.
Well,
Yeah.
I mean, you look at it and you think it it was not conceived of before that. Now we can conceive of it because it happened. So then the question is,
But
can you duplicate it?
what did Bitcoin solve? And the computer science term for what Bitcoin solved is called the Byzantine generals problem.
Okay.
And this is a computer science problem that had previously been unsolved, which is how to keep nodes or positions in a network all on the same page without a center. And that's what Bitcoin's blockchain, it's a chain of blocks, the architecture solved the Byzantine general's problem for the first time. You can't resolve the Byzantine general's problem.
Yeah, you can't resolve it, I guess. And the reason I'll just keep going on this is that you would think with that new technology, that new breakthrough, that it could be applied in more than a single case. But what you're saying is you just don't think that's like it would take the same kind of breakthrough, the same kind of new new something, new technology, new platform like that in order to create something like
Well,
Bitcoin.
well, I'll explain to you why it's not happening again. If Bitcoin solved the Byzantine general's problem, but one of the big arguments against it was that, hey, it's slow. Like it
Mhm.
takes 10 to 30 to 60 minutes
Yeah,
and it's slow. What did people try to do? They tried to invent faster Bitcoin. That's what Litecoin is.
gotcha.
They tried to invent faster Bitcoin. And what did the market do? It dismissed it because the energy went to securing the Bitcoin rules and the Bitcoin protocol. And the market rewarded that with dollars and market value. And has Bitcoin ever lost its position as the number one cryptocurrency by market value? No.
Mm,
And hundreds and thousands of competitors have cycled through and failed, cycled through and failed. So the empirical data is already establishing itself that we won't get another one. So
yeah,
we've had 3 or
interesting.
4 cycles.
Yeah, that's
So
fascinating.
they solved the Byzantine general's problem, and if the answer was to do it faster or smoother in a different way, they have been tried. Or let's try to do Bitcoin, but not do it privately so that we can anonymize the participation because right now it's pseudonymous in a way, you know, you have to link Bitcoin to addresses, right? And those addresses are owned and transferred, and we can track IP addresses.
Yeah.
Privacy is improving in Bitcoin. There are people that are working on those components, not the protocol issuance rules themselves, but the more external dynamics of the software. All those things are being worked on, but companies, startups, people, developers have tried for 14 years
Mhm.
or for a dozen years to copy and improve and have failed.
Yeah. Yeah, fascinating. Okay, now the one last thing that we need to touch on before we end it is just central bank digital currencies. So, and it a government can't create Bitcoin in any any more than any of the other individual whatever like we talked about. My question on this one though is, uh, I mean, they almost present it like they're trying to create an alternative to Bitcoin, and yet then it goes back to again, what's the top of that hierarchy? What's the top layer of the central bank digital currency?
The only thing that the only thing that's jeopardized by central bank digital currency is the commercial banking deposit layer. Because if people are able to use central bank digital currency, think of it as digital cash, like you have dollar
Mhm.
bills, you'll just have a wallet. It might be a Treasury Department wallet, it might be your Wells Fargo app on your phone that you'll just have your Fed coins, your digital cash in there. The only
Yeah,
thing that threatens is why you need a checking account anymore. But in terms of the hierarchy, it's no different than cash. It's
yeah,
still liability of the Fed backed by US Treasuries, which they own on the other side. So central bank digital currency is not an innovation from the monetary hierarchy perspective. And I discussed that in chapter 9 of my
absolutely.
book, Layered Money.
Yeah, I like it. Okay, perfect. Well, this has been super interesting, Nick. I appreciate you coming on. Uh, what are your plans from here?
Yes, I'm writing a second book and I'm building the Bitcoin layer, my research platform. And so I encourage people to go sign up at thebitcoinlayer.com, sign up for the free newsletter. We also write paid research a couple times a week. So, and it's only $10 a month. So it is targeting retail investors and just people that are looking for more research and more information on global macro and Bitcoin and how it all falls in. We don't provide investment advice. We just provide our research opinion on what's going on. Of course, we have a free YouTube channel and podcast. People should go subscribe there as well. You can find all of it at thebitcoinlayer.com. And you'll also get news on my coming book as well through that platform.
Very cool. Okay. Well, I would encourage everyone to check it out and read Layered Money if you're interested. I've been fascinated with it, and hopefully this helps give people a little incentive to do that. But thank you so much for joining us today, Nik. We appreciate it. And thank you, everybody, for listening in, and we'll check you next week.
Thank you for listening to the Money Insights Podcast. To learn more about the financial and business strategies discussed in this show, please visit moneyinsights.net. The views and opinions expressed on the Money Insights Podcast are not intended to be individual financial, tax, or legal advice. Always consult with the appropriate advisor before making financial decisions. And if you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This will help others find the show and learn wealth-building strategies for themselves. Thanks again for tuning in, and we'll catch you in the next episode.